Welcome to Helping Leaders Achieve What Matters. Today I have Scott Crawford, who's a partner with an organization called Preferred CFO with me, and we're going to be talking about turning on the financial headlights. So welcome, Scott.
Mark, great to be with you. Thank you.
You're welcome. What do you mean by turning on the financial headlights?
Well, it's a topic. Most topics in finance are difficult to envision or communicate. So we found a way to be able to do that. We ask business owners in particular to imagine driving on a mountain road at night without good headlights. How far down the road do you want to be able to see the deer before it jumps out onto the road? If you're a really small business mom and pop and you're doing 5 to 10 miles an hour, you still want to see the deer before it jumps out. But if you have that collision, it's not as impactful as if you're doing 60 or 70 miles an hour and the deer jumps out. And of course, you'll cover that distance a lot faster as you're a bigger company. So that's our analogy to turning on the financial headlights. How far down the road do you want to see before the unexpected occurs? And you want to have that time to be able to avoid it or make a change, stop, maybe, take a different route perhaps. So that's our reference to turn on the financial headlights, see further and further down the road with respect to running your business.
All right, I want to see as far down the road as I can if there's going to be something that's going to cause a disruption in my driving. So.
Oh, absolutely. Yep.
So, in your experience, what are the key benefits to small business owners? This podcast is designed for CEOs of small to middle-sized businesses, generally between 10 million and 200 million in revenue.
Okay. So the advantages of being forward-facing, and that's really the first recommendation that we make is a change in mindset with respect to the business owner, the business leader. And it has to do with thinking about the impact of today's financial decisions at a 3 to 5 year point down the road. What you did last month and last year in your company and revenue and profitability and EBITDA is important. But it's significantly more important to know what you're going to do next month, next year, and for the next 3 to 5 years. So every significant, but certainly every financial decision has an impact upon a company's profitability.
Yes.
Which shows up on their profit and loss or their income statement. It has an impact on the value or equity of their company, which appears on their balance sheet. And it often has an impact upon the cash required to complete that transaction. And that's part of their cash modeling as they look into the future. So we really believe that every business owner, every business leader needs and truly deserves to have the financial tools to have a reasonable expectation about the future outcome of today's financial decisions. Again, on each one of those 3 areas, profitability, value or equity, and the cash required to complete. And that's what a true set of financial tools delivered by a complete financial team should give the business owner, regardless of size. But coming back to that earlier analogy, it becomes more critical as you become bigger and you gain more speed on that mountain road to be able to see further and further down the road.
I heard you say the term a complete financial team. What is a complete financial team?
That's a great question. And the top end of that team, or the difference specifically between a controller and a CFO, is the number one question we are asked to answer. And when we're able to deliver seminars and workshops on this topic, when that slide comes up about the difference between a controller and a CFO, that's where the phones come out and the snapshots get taken by the participants. But, we encourage business owners, as I mentioned, to adopt a forward-facing mindset. If they are successful at doing that, they've got to have a team that can support that. And it has to be a complete team. It takes more horsepower to be able to see into the future than it does to simply record what happened in the past. So in our mind, a complete financial team, and in our experience, which is hundreds of thousands of hours of fractional CFO work, is made up of your accountants, your bookkeepers, your accounting department. They're your daily transactionists. They do the AR, the AP. They may do some portion or all of payroll. They think in terms of cash basis, money, cash in, cash out, and they're just your daily transactionist. Then you've got a CPA or a tax advisor. They're almost always outsourced. Their job is to stay up on the latest in tax laws. My daughter happens to be a really, really good tax CPA. She got her master's in tax. In fact, she got her master's in foreign tax. And last year, there was in 2020, for the tax year of 2021, filed in 2022, or sorry, 2022 filed in 2023, there was a minor change in the tax law. It hadn't applied to my rental properties before, but it did last year. I would never have known. It saved me 20% of my taxes because I had a good tax advisor that was able to keep up on tax law. So that's your outsourced tax advisor CPA. Then you've got a controller. Your controller is your historian. In the analogy of the car, they would be the tail lights. They're responsible for making sure that your record keeping is accurate, that it truly reflects what's happened in your company, that the records you give to your tax advisor, your bank, an investor, a potential buyer are accurate, they're GAAP compliant, and they really reflect what the history of the company has been from a financial standpoint. And they think in terms of accrual accounting versus cash accounting.
Yes.
And then the last position is the CFO. CFO is the head of the financial team, member of the C-suite, and they are the headlights in the analogy of the car. They're the ones that are looking into the future. They're the ones that are looking for deer to assess risk. They're trying to determine whether the path ahead is straight so you can accelerate down that path and where to invest your resources. They're the forecaster. We had another great Vistage chair, and there's so much wisdom that comes out of Vistage. I just can't overstate that. And we see it from group to group to group and chair to chair across the country. But we had a Vistage chair that shared his reference, and he said, the controller is the person standing at the back of the boat, radioing up to the bridge, that everything behind the boat looks great. Captain, looks great from back here, carry on. But the CFO is standing on the bridge next to the captain, helping he or she navigate around obstacles and steer the boat into the best possible future. And that's the CFO's job. So headlights versus tail lights, and then you've got your crew down and maybe in the purser's office is doing all the daily transactions for the guests.
I got it. Now, when you talk CFO, and I know in New York, they make a lot of money, according to some of my members. And if you're a $10 million company, I mean, at what stage do you get a CFO? I mean, I think almost all of them have a controller, but some of them don't really have a CFO, or some of them may have promoted their controller to CFO because they've been there for so long. At what stage do you think you need a CFO? And then I'll come back to that second question.
Yeah. So, Mark, you continue to impress me every time we talk with just your awareness. I mean, so far beyond, even the average chair or business leader, but because most chairs, and we know most chairs, most business leaders, most advisors have a background in sales or marketing, or they might be an operational person. You don't find CFOs in this kind of leadership position. It's just normally not in their personality. But you've identified exactly what the problem is, and that's question number 2, or part number 2. But when do they need a CFO? Every company needs a CFO. They just need the knowledge without the expense. And that's true not just for CFO services. It's true in IT and just about anything else you can fractionalize. There's fractional resources out there for culture and IT and marketing, and so the question really is, how many hours of a CFO do you need, and do you have the right CFO for your business? So if you're $10 million, you need that CFO leadership, but that leadership can be provided to you for maybe 10 hours a week rather than 40 or 50 hours a week. And therefore, you're saving that money. You still have the leadership. You don't have the liability of a body, but what you need is knowledge and experience. You don't need the body. You don't need that liability. The other part of it is, when do you make that transition from a fractional leadership on the CFO side to a full-time CFO? that is also hours based. So if your CFO, the demands on your CFO is now reaching 40 or 50 hours per week, that's when you want to consider engaging a full-time employee solution and disengage the fractional solution. The longer you can put that transition off, the better CFO you'll have, because it'll be best matched to your business. We brought on a client Vistage member about 3.5 years ago out of Texas in the construction business. And when they came to us upon referral from their Vistage chair, they were about $20 million, but they had this incredible growth plan through vertical acquisitions. And so the first CFO we actually assigned to them was not a construction CFO, despite their desire to have a construction CFO. We said, we'll give you that, but that's not what you need. You need a money raised CFO. And for about the first 9 months, we gave them a money raised CFO, and they went from, well, when we disengaged and they brought on their own full-time CFO, they had reached from $20 million to $230 million, and they did that in about 2 years. Wow. But they needed a tremendous amount of growth capital, and that's the CFO we assigned. And then they reached a more mature level of organization. We made a change, and we assigned a different CFO that was more tailored to where they were in their growth cycle, and that took them into their own full-time CFO. So even if they had the resources to hire a CFO in the beginning, it wouldn't have been the right CFO. So it's you want to postpone that decision till you can make the right decision.
Makes sense. And so what about this idea, and I'll tell you, I think the majority of my Vistage members have done this, promoting your controller or just naming your controller a CFO.
Yeah. Yeah, that is so common. When we are asked to dive into businesses, Mark, we find generally one of two things: that they have the right players on the team, but they're in the wrong positions. Maybe they really do have a CFO by mindset and skills, and they just need to be mentored or trained into a CFO position. Or second thing we find is they've done exactly what you described. They promoted someone that isn't qualified, and they're calling their CFO. They check that box, but they haven't succeeded. You know, we can identify a lot about what truly makes a CFO. It's probably a worthy topic to dive into for a few minutes, but we were referred to another Vistage group and a Vistage member company, and the beginning of the conversation, the CEO says, look, I want you to understand, I have a high commitment to promoting from within. We always want our employees to see an upward path for their career path. And our CFO has been with us for 38 years. I said, that's great. You got a great CFO, knows the company well. Why are we having this conversation? Well, he said, I got to tell you, she started with us in the accounting department. She was a bookkeeper, and then we promoted her to senior accounting manager. Then we promoted to controller. And then 3 years ago, we promoted her to CFO.
Yes.
Great. That's great. Why are we having this conversation? We've got to fire her. Why? Well, because she's failing. She's miserable. We're miserable. Why don't you move her back into the controller position? Because we backfilled that position. That person's doing a phenomenal job. So this was one of those that, despite the very worthy commitment of management to upward mobility within their company, this individual didn't have the mindset and they didn't have the skill set to be able to make that transition from being rearward facing, a historian, to being forward facing, a controller or a forecaster, a CFO. So it just backfired on them.
Yeah.
So yeah, that is incredibly common.
And you know, sometimes I hear members talk, well, I want a hands-on CFO, meaning I want him to do the controller work or her to do the controller work, to produce the financial statements and be my CFO. Something seems off there. Am I right?
Yeah, absolutely. It's kind of like saying, hey, I need my transmission rebuilt in my automobile. Yes. And I can take it to the transmission shop that does that really technical work. Or I can take it to my mechanic that changes my oil because I know he's rebuilt his own transmission on the weekends. You want to make the right choice there. The technical stuff you want done by the technical person. Conversely, I can take my car to the guy that knows how to rebuild my transmission for an oil change. But he's not going to want to do that very often. It's below him. It's just like It's just not a good use of time. And if he falls into that trap, or he or she, the mechanic, falls into the trap of like, well, I can make money doing oil changes, they'll lose their skill set of rebuilding transmissions. So you're either paying a CFO to do underskilled work, if you're spending twice as much as you should, or you'll never get the true strategic work you need out of the CFO. They'll just be a controller.
So what are some of the differences? How do you know, between a controller and a CFO? I know you said forward looking versus rear looking, but what are some of the things that a CFO would be doing that, I as a CEO could say, oh, I got somebody that's doing this and they're doing it well? Like, what would be success factors?
Well, let me share with you, Mark, some of the things that we determine, because one of those is a more expanded subject. So the first one is deliverables. So we believe there are 6 essential tools that every CEO should have access to. Yes. Those are the tools I referenced earlier that give them what they need to have a reasonable expectation about the future outcome of today's financial decisions across all aspects of the company. There are 6 tools we believe that are responsible for that. So how do you know if your CFO is a CFO? Can they deliver the tools? Can they deliver those forward-facing tools? Because we hire employees, when we look to hire a CFO, that's the one thing we ask for. That's the primary thing we ask for. We want to see your deliverables. We want to see your 5-year forecast. We want to see your rolling 12-month forecast. We want to see an annual budget. We want to see your 13-week cash flow. We want to see all those tools. We want to see a budget to actual report. We want to see all those tools because we can see in the tools, the algorithms about how they think. How accurate are they in their forecasting? How easily can they respond to a what if question? Well, we've got 3 options that we're facing a decision on. One has this cost, one has this cost, one has this cost with the possible outcomes. Plug those costs in and give me a best case, worst case, and an expected case scenario 1, 3, 5 years down the road. A CFO should be able to do that and do it really quite quickly.
Yes.
So can they deliver the tools? So that's number one. There's an issue of cost. And I think that's why a lot of companies will promote a controller and title him their CFO. But it's also, how do you know if your CFO is a true CFO? Right. Each market's a little bit different as far as wages, but there's a formula that generally holds true. So if you take your bookkeeper or your accountant's salary and you double it, that's generally your controller's salary.
Really?
And double it again, and that's generally your CFO's salary.
Okay, that makes sense. Like here in New York City, I think controllers are at about 125,000 a year, and I know CFOs are in that 250. I hear 300. I hear 350 range. So
yeah, and controllers can be that 125 to 175, even maybe 200. So, a company that has the demands that they are willing and capable and need a $200,000 a year controller and need a $400,000 a year CFO. But that's, those are lofty salaries in all cases.
Another issue that, I wonder about is, I hear about these finance teams that have like 5 or 6 people on a team. And I think, oh my God, you really need that many people? How many invoices are you doing per month? I mean, am I thinking small here?
Every company is unique, and a lot has to do with transactional volume. So, you always want, in order to have the best possible deliverables or the best possible financial team at the least possible cost, you always want to fill internally. So we've had clients come to us, especially in the tech sector where they're well-funded, and they said, look, we want to have everything outsourced to begin with, and we want top to bottom, bookkeeper, controller, CFO. Well, as we start work, when their transactional volumes become sufficient that our bookkeeper, ours, because we can layer down from CFO to controller bookkeeper, when our bookkeeper's working 40 or 50 hours a week on one account, that's when the CFO goes to the CEO and says, look, your better solution, your higher value solution is let's disengage at the bookkeeping level, and you're going to hire, we'll still oversee, train, will run the person, but it's going to be an employee at the bookkeeper level. And then we repeat it at the controller level when those controller hours reach 40 or 50 hour a week. And then again, we repeat it at the CFO level and we disengage. So yeah, if you've got a company that is, even with automation, and automation as far as AR and AP is very helpful, but even with automation, if their bookkeeping department is 60, 70 hours and they're burning out people, then they probably need a second. But short of having multiple CFOs, because you have such discrete divisions that are doing completely different functions, even they roll up into the corporate office, one CFO should be able to oversee the entire company. Again, unless you layer in controllers, the CFO still has got to be the strategist. I mean, you don't have two CEOs just because your company has grown to be gigantic. You may have more different divisions. Right. Same with the CFO.
Yeah. Yeah. And I'm thinking, is that part of the CFO's job, is to take a look at the financial processes to determine the manpower that's needed? Or is that a controller job?
That's a CFO's job. The CFO is responsible for the entire financial team.
Got it. Got it. Now, sometimes I hear members say, well, my CFO is responsible for the banking relationships, looking at mergers and acquisitions and forecasting, help me determine geography, if we're going to expand, if it makes sense to expand. Are those CFO roles?
Absolutely. Yeah, absolutely. And it has to do with the demands of the company. So, if you've got a company that is expanding dramatically, kind of like the one client we had that was in the construction business out of Texas, maybe they're adding multiple offices. They need a more strategic, analytical CFO, and they probably need one that can raise money, whether that's through debt or equity, perhaps. And because the CFO has got to be able to determine the value, what makes sense in a business. So if they are scaling up by adding additional locations, they want to be able to look at all their current locations and say, this one's more successful. Why? This one's not as successful. Why? Can we change this one to make it more successful? And so when we open up a new office, we want to take the disciplines for the more successful offices and be able to scale. That's a CFO's job, to be able to do those analytics.
Got it. So, I'm a former CEO, and I would get my financial statements. And honestly, what I would look at is, what were my sales and how is that different from last year? And did I make a profit and how is that different from last year?
Yeah.
Those were really the only things that I looked at.
Yeah.
What should a CEO be looking at on their financial statements? Because a lot of CEOs, actually, I can't think of any of them that came from a finance background. Most of them were technical experts or sales experts, or had an expertise and founded the company and grew it to a certain stage, and then hired somebody. Maybe only a fraction of them actually got an MBA or studied finance in college. What should a CEO be looking at on a regular basis?
Yep. Mark, well said. That's exactly what we found. The finance people are not CEOs, and certainly not serial entrepreneurs for the most part. That's a similar question we'd ask. So if we bring on a CFO or we hire a CFO, how much of my time is this going to take of me as a CEO? Because I have a limited bandwidth. What should I really be looking at? I'm going to back up to the difference between a controller and a CFO, because it answers that question. A controller, we know this because we work with all of them, CFOs and controllers, but to describe it has always been a challenge. So one of the ways to describe it is, besides mindset, is controllers deal in data, CFOs deal in information. So if your controller comes in and drops the financial report on your desk, Mark, each month as the CEO, and says, there's your report for last month. Congratulations to me. It's here by the 6th, not the 10th. I'm early this month, but I'll see you next month. That's a controller, because he'd left it to you to know what to look at. The CFO should say, hey, Mark, I'm ready to huddle. We've got last month's and the year-to-date numbers here. We can drill down into anything you want, but this is what the numbers are telling me. Mark, you should pay attention to this office or this function or this promotion or this expense because it's trending in the wrong direction. So the CFO should be able to give guidance and actually lessen the load on the CEO because they are the ones that know best how to interpret that data. They deal in information, controllers deal in data. Does that make sense?
No, that makes complete sense. They're helping you to interpret that data because a lot of times I, as a former CEO, and I'm sure some of my current CEOs do the same thing and just look at whether or not we made a profit, but aren't thinking about, well, what's the difference between the profit we made so far this year and the profit compared to last year, and what's trending in this direction, and what are some potential actions that we can take to increase profitability or increase margins or decrease our expenses or increase our revenue. And what I'm hearing you say is that the true CFO is like a real partner on the leadership team, engaged in those conversations and telling you based on data what might be strategies or opportunities for change.
Exactly. Yeah. They should have that experience and that insight as the CFO to be able to understand the data and tell you the direction you're going and the steps you need to become more profitable, to avoid pitfalls, and to really drive the company the direction that you as the CEO and the board and whoever's owns and leads the company that you want, where you want to go, where you want to be. It's a matter of looking down the road. Unfortunately, we know a lot of companies that have had that mindset of my profit and loss says I'm profitable, and I've got cash in the bank. I'm doing great. But they were consuming resources, which is why they had cash in the bank, and they were growing, which showed up on their P&L. They had no idea they were going to run out of the resources to be able to convert to cash, and they were going to cash out. And they weren't going to have the cash to be able to fund that profitable growth because they weren't paying attention to their balance sheet, or they didn't have anybody that could look at all aspects of the company.
I also heard you say that the financials were dropped off at the 6th of the month, and that person was proud that it wasn't the 11th. What is a reasonable expectation date to get your financials?
We have set the 10th as like the drop dead date, that the financial should be closed for the month prior and year to date by the 10th of the following month. We like it certain to that, but that's the drop dead. Because, if it doesn't come till the 15th, you're already halfway through the next month. So you've lost the ability to have an influence, positive or correctional, on that month. You're already halfway through it.
Yeah, exactly.
So,
Exactly. The other thing that, you offer fractional CFO services. How do I know if the person that I'm interviewing or talking, because I don't have this finance background, how do I know if if a company is competent, or if I'm interviewing individuals, how do I know that they're a competent CFO?
Yeah. Again, great question. It's sometimes easier to answer if you're hiring somebody, because like we do when we hire, we ask for deliverables and we want to see all the tools, the modeling, the forecasting that they do. There are a lot of individuals out there that want to be considered a CFO, but they're not. They're really a co-pilot. They're a controller. So in our case, we can change and substitute team members. What we're really trying to find is a fit from a cultural and communication standpoint. So when we interview a CEO, potential client, we find out where they are, where they want to get to, what their pitfalls that they may be aware of are, what their opportunities are. And when I say get to, maybe that's an exit, or whether it's a lifestyle or whatever they want to do. Then we go back and we know our team members very well, because I myself, at the partner, ever follow up with every one of our clients on a regular basis and ask, what are we doing right and what are we doing better? So I get a report card in every one of our CFOs about what they're providing to our clients on a regular basis. So we make those assignments, but ultimately it's up to the CEO to decide whether they can communicate with the CEO. If you're hiring a freelancer off the street, much more difficult situation, because you almost have to have the mindset as the CEO you don't know what you don't know. So you don't know what the CFO should be providing to you. So you often don't know what questions to ask. And, even if we're not the choice, we're more than happy to give any Vistage member on referral from their chair some pro bono time, ask those questions. Where are you now? Where do you want to get to? And I'll be happy to supply to them our foundational statement of work. And I say foundational is because it's where we start with an engagement and say, these are the high level functions that a CFO should be providing. These are the specific deliverables. And then we add to or subtract from that as is appropriate for this particular client situation. But having the foundational statement of work or understanding of what a CFO should be providing is probably the first step to knowing the questions to ask about a potential CFO hire or engagement, because it's a little bit more of giving the CEO the knowledge of what they don't know.
Wow, great. Yeah, that's very generous of you. Thank you.
Absolutely. It's, again, we see the difference that Vistage makes in the lives of their members. We've never understood, though, Mark, whether looking to become better, that mindset is what brought them to Vistage, or whether they develop that mindset because they're part of Vistage. I think it's probably a little bit of both, but those two things go hand in hand. How do I continually find improvement? And Vistage is a solution to that, or at least a vehicle to that.
I think it's a both and speaking of Vistage, we're a peer group organization where we, get a group of CEOs together, and sometimes we look at each other's financials, but what could we do as Vistage, as a group, to support each other from a financial standpoint?
Yeah. So, this podcast was to deliver some valuable information, and so it's not a pitch on what we do, but we do offer to Vistage groups a seminar entitled "Turn on the Financial Headlights." It's 3 hours, and one of the outcomes from that is we lay a financial discussion foundation. So every member of the group and the chair now knows the same references, the same tools that they should be holding themselves accountable for, what that tool is, what that financial tool does as far as a benefit. So having that common reference point means they can continue to dialogue about that month after month after month and hold each other accountable. I think that's probably one of the highest compliments or feedbacks that came out of one of the early seminars that I was able to present. Was the chair reached out to me 6 or 7 months later and says, I just want you to know the impact that you had upon our group. We have dialogued about the topic that you taught us on every single month since you were here. And I've found in doing that, and we're not the only solution to that, Mark, but because I've found some groups, a rare chair that is a CFO or has that financial background, but I've found a little bit more common, some groups that have CFOs in the CEO seat, so therefore a member of a CE group. And when that becomes known by the chair, that individual, that member can be the resource to establish that foundation of communication and dialogue, and then elevate the entire Vistage group on financial matters.
Wonderful. Well, I know that I've got you booked to speak to my CEOs, and I'm looking forward to learning how we can add that value for each of our CEO members. I also know that a lot of other Vistage chairs listen to this podcast. So how would they get a hold of you if they wanted to book you as a speaker, or how would a CEO get a hold of you if they wanted to find out more information about the services that you offer?
Mark, I can make my information available however you'd like to see that distributed. I freely give out my Calendly link. I've never had anybody abuse it. I think you're the same way, which I've appreciated because I think it's respectful of your time to not have to go back and forth and say, hey, Mark, when can we meet? Do you want to meet? And I've never had anybody abuse that, but I've got a readily available Calendly link. I am a Vistage speaker, so I can be booked through the Vistage Speakers Bureau. And again, I'm completely accessible. So however you'd recommend that I make my phone number, my email address, and my Calendly link available, I'm happy to do that.
Right. And what is your website?
Website is www, of course, preferredcfo.com. Preferredcfo.com.
Well, Scott, this has been illuminating. turned on the headlights for me. Well, thank you. Thank you very much for your time today. And this has been Helping Leaders Achieve What Matters. Thank you very much.
My pleasure, Mark. Thank you.